just had the much anticipated jobs data coming through. Once again, it did not meet expectations. It's always such a volatile series. We saw 55,000 jobs created in October versus estimates of 20,000. The unemployment rate did edge up to 3.7%. What does all this mean for the currency markets? Of course, though, we are going to get Nick Twidale's view from FP Markets. Nick, good to see you. I mean, the Aussie dollar, 65 cents. Let's see how it's reacted and your view here in response to the data.
Yeah, sure. I mean, I think initially having the Aussie at 65, when we saw a bit of appreciation in the greenback overnight, it was a bit of a surprise this morning. And I think definitely there was a lot of options interest around that level, and we haven't really seen too much of a reaction. I think from the data and just looking at the chart that we popped up there, it's been above 65 a few times over the last few months, and then comes straight back down into the range. And I've got a funny feeling we're going to see a similar thing today. Especially after the move that we saw in the greenback overnight.
Right.
But I think certainly, you know, one of the focuses, the headline figure on that 3.7% unemployment rate, that is creeping up a bit, kind of helps us a little bit. I think we've probably still got an expectation of one more rate rise before, I think, May next year. But maybe this will start to bring back those expectations moving forward. I
mean, a lot of it is the dollar weakness too, as we saw those bond yields fall in the wake of the inflation data in the US. With the Fed looking like it's done, does that mean the Aussie is kind of signalling a comeback?
Well, I think it could do, but that does seem to change on a daily basis, doesn't it? Whether we think the Fed's done or not.
Yeah, true.
You know, certainly after CPI, the way stock markets in the US reacted, then you would say so. But I've still got a sneaky feeling, and if you do listen to Fed speakers, and Jerome Powell in particular, he needs to see consistent data. And so we're getting these one-off hits, and they're certainly a move in the right direction. But and for the Aussie against the dollar, I think it's crucial. And I think we're not quite there yet. I'd like to see probably us to get through to Christmas with weaker numbers, but not too weak out the US, that will then pull back that sort of Fed rate expectation. And then I think that lets the Aussie fly.
All right, let's have a look as well at what we're seeing with dollar yen. I mean, there's been a very crucial potential intervention point here once again. You've got a chart on yen, those points there. What are you seeing the chart show you?
Yeah, I mean, another one that everyone's talking about in the currency markets as well. I mean, even after the CPI data, we got dollar yen got smacked down a good 150 points. It really, I mean, it hit 150 and that was it, and it bounced 120, 130 overnight. It doesn't seem that we're going to lose this carry trade momentum. I probably should have thrown in some more charts on the crosses because they are looking exceptionally steep as well.
Right, yeah.
So if you look at Aussie yen, I think we're hitting multi-year highs. We're not far. If we break above the levels that we're at the moment, it then takes us much higher and takes us back to levels that we haven't seen since 2015. So it really is very interesting how the yen trade's going. And we've heard about the BOJ. There's talk about smoothing action again. Even former guys from the BOJ and the MOF have said, look, in this market conditions, they're not going to be able to stop the momentum, but they may smooth it a bit. So it's going to be interesting. It's going to be very volatile that we're going to see in the yen and yen crosses over the next few months, I think. Just
looking at the pound, I mean, the UK CPI was a miss there. It does seem that we're seeing a bit of rejection at 125.
Yeah, there was a few highs up there, and that hit. Once again, it's a chart I didn't put in, but it hit a trend line on one of the short-term charts perfectly. Straight after CPI, it basically stopped up CPI in the US, it stopped there, and then the data came out the UK a little bit weak, and we've dropped back into ranges. So I think sterling, you know, there's a good argument maybe for sterling to start coming off a bit. Even so, their inflation rate's still ridiculously high, so it does need to come back a little bit harder. And once again, similar to with the US, the Bank of England needs to see more consistent data coming in to really pull back on having these higher interest rates.
I wanted to get your thoughts as well on what we're seeing with Aussie Kiwi, because the RBNZ was very much ahead of the curve when it came to tightening rates, and now it looks like quite a weak economy there. What does that mean for the Aussie Kiwi relationship?
I think once again we're going to see the Aussie Kiwi move a little bit higher for the same reasons we were just talking about. There could be good reasons coming in the next few months to buy the Aussie. And once again, the RBNZ do tend to be a little bit more flexible than some of their sort of counterparts, and they do get ahead of the curve. Excuse me. And I think they are once again sort of seeing signs in New Zealand that things aren't particularly great, and they're also very vulnerable to harder landings and harder enforcement across the economy than a lot of others, because it's not so diversified. So I think that does open the way for Aussie Kiwi to move a little bit higher over the longer term.
Is there any EM currencies on your radar at the moment?
I'm always going to be looking at China.
Yeah.
I think it's very, very interesting to see what's going on there. I mean, if you look at any of the news channels overnight, China's still front and centre. Obviously some political moves going over, obviously Australian prime ministers, we've got Biden presidents of the US. Yeah, everyone's starting to talk to China. So I think that's encouraging for currency traders to maybe start looking for levels to buy the yuan, but
what levels would you be looking at?
I don't think we're quite there yet, and I'm not going to commit to any levels because I haven't even got a chart.
Oh, okay, no worries, no, fair enough. Okay, a quick word then on the euro.
I mean, once again, I think we saw a massive move after CPI in the euro. It took us up to those levels. I think we're going to drop back into the range for the euro as well. It's more on the back of my dollar view that I don't think we've seen enough to really get too excited about rate cuts in the US in 6, 9, 12 months' time. But I think the euro, we've maybe seen short-term highs.